Good morning. Welcome everyone to Admiral Markets webinar. Today's focus is strategy, and we'll dive into the wave patterns basically today, main focus. First of all, though, we take a look at these disclaimers. My name is Chris, by the way, and we're going to explain that this webinar and recording is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity for more details and information. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. As always, when I take a look at analysis, there are 3 steps: defining trend and momentum, looking for patterns, for instance, chart patterns, candlestick patterns, wave patterns, divergence patterns, looking for support or resistance is step 3, and then basically trying to make a roadmap for price, identifying the decision zones, and looking for triggers at those key levels. Alrighty, so today we have the FOMC meeting minute statements. We'll see a bit more info about, perhaps a rate hike or not. That has been the question hanging in the air for the entire 2016. It has not yet happened. Last year it was December when it happened. And definitely the market expected that to, I think, at that time the expectation was that there would be a few rate hikes. I had my reservations, and I think that I discussed that in the webinar December about the potential this year. If I remember correctly, and I'm not 100% sure, but if that is correct, then I was not expecting many rate hikes. So far, it's been pretty empty indeed, 0 so far, and I think that most of the consensus was leaning towards 2 to 4. Now, if we're lucky, we're going to get 1, and that could be again December, but it's not a done deal. So this meeting minutes will provide perhaps more information about that, and we'll see if that will happen or not. Otherwise, take a look at the calendar for more details about what could be expected today. Go to Analytics and Calendar right here. And you got more things as well, by the way. Fundamental Technical Wave Analysis, our blog, Ned and I, here writing about market heat map, of course, as well. You can see here the bigger movers, some stocks, pound yen. Euro pound was a big upside. Pound yen was a big downside. Pound dollar was a big downside. But pound has been already moving up again. As you can see, the biggest currency range, definitely the pound, is really crisscrossing around. Let's take a look at that right now, and we'll dive into some of these majors and discuss what we talked about yesterday as well and what we can expect today also with regard to waves. So last week, we talked about wave analysis, about complex corrections, and there was some questions afterwards about, defining, basically fitting it into picture, labeling, and about what-if analysis. So I would like to dive a bit into that and explain some of those follow-up questions I received after the webinar, which were great. So yeah, it's difficult to discuss everything regarding complex corrections. I was diving into why I think basically waves are important as well. But let's dive into some of these details and what happens if certain analysis gets invalidated or confirmed, among other things. So your dollar basically did break yesterday. I was rather leaning towards a bounce, but I definitely wanted to see it bounce first on the lower time frame, and that didn't happen. If we look at the 5-minute chart here, for instance, you can see, let's see, yesterday, where's yesterday? Here, no. Here, yeah, here, look, we were looking at it here, and I said, okay, if we get a bounce and a hook back like this, there could be a head and shoulders, remember? we didn't get it. We got a sideways zone like this. So this is a good example of basically a pattern after the pattern. Now, this is maybe not a, this is not the perfect one because I was saying I would like a break of 111. So this is not ideal because it didn't break 111 yet. But do keep in mind that the pattern itself, although 111 was not broken, does kind of indicate that upside, it's not an upside rebound. Upside rebound, we really needed to see a momentum and then a hook back like this. And then we could have said, okay, there's some evidence here or some confluence that we could get a bigger rally, a bigger ABC, for instance, zigzag to the upside. This little piece here definitely does not look like the start of an ABC flat or an ABC zigzag. In this case, bullish zigzag. Not at all. It looks like a flag, a bear flag. Bear flags are corrective pieces. We see momentum prior to it. So that does not look like a strong bullish retracement. It looks like a weak corrective piece. And when a flag like that breaks, we typically expect a continuation. And that's what happened. So we got the continuation. Now, the fact that it didn't break 111, that means that it really didn't meet my criteria. But just looking at this, you can see the patterns and the chart patterns here on the chart. Now, so we got the break. That's what I was looking for. And after that, I was bearish. We got a great pullback here, an ABC pullback like this. So we can do two things. We can put a fib on this swing high, swing low, for instance, or this swing high, swing low. Both have basically fibs respecting it. The other good thing would be to add a fib that shows the retracement fibs like this. All right, like that. And very close to the minus 272 target. You got a 111 round level 2. So looking for shorts anywhere around 110.70, 110.90, 111 made sense. This was the pullback we were looking for. If you add the oscillator as well, by the way, as I always do typically, then you got to move up to the zero line. That's exactly the pullback that I'm waiting for. The strong move down here on the 5-minute chart. The pullback here. Yeah, so that's exactly the formation here that is basically indicating a high likelihood of a continuation. And we got that. So it's not a great, it wasn't a huge move. It fell down to 110.50 and even fell almost to 110.25. Did anyone trade the euro dollar to the downside yesterday by any chance? So with that break, we do have something interesting going on because basically we're looking at a 2-month consolidation zone that has been broken. So yeah, that is substantial. It is noteworthy, and let's see how far it can push. For me, still 110 is important to break. If it breaks 110, I think we could see more momentum kick in. So that still remains the question. Anyone looking at my wave analysis yesterday knew that the triangle, in my opinion, was over here, and that this was going to be a last correction before the fall. Now, whether this was the fall or still one more correction within the correction, that could have easily happened. So Dogon, for instance, took an upside trade. I too, I was looking for a bounce. It just, in my opinion, didn't get, a trigger that confirmed that bounce in my vision, right? But if you saw a confirmation, or if you just traded the level, then unfortunately, indeed, that was a loss. But that always can happen. Don't worry about that. Losses are part of the game, part of the learning. They're just needed. We cannot have only winners. It's just it's just part of the business. So yeah, it's occupational hazard indeed. Yeah, that's nothing we can do about it indeed. So don't beat yourself up. I think from my perspective, I thought it was more likely it would bounce, but I was definitely wanted to see some bullish reaction first, personally. Now you might say, how about this? For instance, I'm not sure exactly when that was Oh, that was before our webinar. That was during our webinar, we saw this happening right here. So these candles really didn't believe to me that it was bouncing. On the 5-minute chart, we saw basically this go sideways. So yeah, that's why it didn't seem that attractive. But anyone, yeah, it can always happen. So with that break, basically we're looking at, let me move this here. Strong daily candle. And you see a very, very choppy zone finally being broken. Look at those bottoms being broken here. See that? Descending wedge there. But I don't think support is totally out of the way. You know, this is, okay, this trend line is being broken. But this one is still intact. We got 110 psychological level as well. And we got bottoms in here. Yeah, so I think it's still something that we have to treat with caution. Yes, it is moving lower. I think it will continue lower. But be careful of 110, 109.50, 109, 108.25. You know, these are small zones before we really can push into a bit more clearer kind of part. Anyhow, yesterday's candle was a breakout, so I think any retracement today would still be good to short down to 110 in my opinion. Here it is, 4-hour chart. Good momentum burst on the hourly chart. We saw that this was a good momentum. Here was caution, and then we got a continuation. So at this point, I think with the oscillator turning at this moment, I wouldn't be surprised that this is completing a fifth wave of probably some kind of zigzag. So I myself wouldn't think that now is a good short after, let's see what kind of move this is. 165. All right, we're looking at probably a bouncing spot. I would expect to bounce here, but then the next move could be quite sharp, I think. This is typical when you start to move away from a consolidation zone like this. I think it's, you know, we would have to get a bit lower before we can get an acceleration. I think once we break here, we could see price move easily to, let me calculate here. I'm doing the Fibonacci sequence quickly. Okay, I think there's a good chance of price getting down to 108. Now, it doesn't mean that those support levels are still not important, but let me add the moving average here. No, not that one, sorry. All right. And let me put a fib from here to here. Good. All right, as long as we stay under the 50 fib, I think that this is a pretty good chance that price might make a pretty impulsive fall. So that has to do with the fact that this was so impulsive. So yes, we looked at a lot of levels on the daily chart, and those are strong levels. And I'm not saying that price will not stop at those, but if I look at the hourly chart and I see such a strong momentum, then typically with such a momentum, if we do get a shallow pullback like this, I think we'll see an equally strong fall in the third part. This is the first, this is the second, this is the third. Most likely I would say that this is going to be an A, B, C here. So that's interesting. I think that at this moment, it's not a good place to short because of the fact that, first of all, the oscillator is turning around. Second of all, we had already a decent amount of pips fallen. And I think a pullback continuation is the most likely scenario. I think that we'll not go further than the 38 or 50 fib. Actually, if you put a fib on the daily chart, or daily candle, sorry, 110.80, 110.90, that could be very, very good turning spots there. All right, so I'm expecting a bit of a corrective pattern here and then a turnaround for more downside, at least to 110. But considering this strong momentum, I wouldn't be surprised if it keeps breaking to 109.50 and all the way down even to 108. All right, we're going to look at the 5-minute chart. Let me get rid of this fib. Got multiple divergences here. I just think that we're in an oversold kind of situation. Now, I'm not saying it could not still push 25 pips more lower. But considering these factors of basic divergence, strong level nearby, a hook back, very, very likely, I think, in this scenario. The fact that this could easily finish an A and we get an ABC. Let's see, what else do we have here? Got a minus 61.8 target close by. So I think that from that perspective, there's too many arguments to say, you know, this is going to make a retracement. We have maybe engulfing twins is not a great signal though, even here, because you can see that's not always the best of signals. But I think if this 4-hour candle turns bullish, for instance, that would be probably a decent signal of a bounce. But this is, you want to see at least a close, I think, near the high and probably some type of body like this. The doji might not be enough in this case, but so let's see. Anyhow, I'm not sure if it will bounce here or at a bit lower, maybe 110.10, 110.50. For me, it's not worth trading to the downside. If it bounces here or a bit lower, I would expect price to make that rally up to 110.75, 111-ish. And expect a continuation lower. I don't expect a break of yesterday's high. That would be, I think, a good stop loss placement. And that's about it. If we see more bearish candles pop up like this, then I think we'll reach these 108, 107.50. Then we'll have to see how price reaches, response to that level right here. All right, if we break that, then who knows? We might be in a new downtrend already. We're starting it very soon. But that depends on how price breaks these support levels. All right. Let's see. Now, pound, maybe also here. Let's take a look quickly at the wave analysis. Pound stopped at 120. Oh, 121. And yeah, the 78.6 fib. And basically, hang on. Basically, this this 78.6 fib is not so surprising. We talked about it, that it would probably build a range within wave 4. The strong momentum down, basically, so much momentum. I think that the price needs to take a breath, basically catch its breath, take a bit of a pause, regain its kind of composure in a way. If it moved that much, I'm not surprised that prices are going to make a triangle here. That we were saying that from the start. And yes, downside yesterday, we talked about it, made sense upon the continuation. Let's see if we have a second. We were looking at it somewhere here. Yeah, so we had some downside pullback and a strong continuation. Anyhow, let me go back here. But as you can see, price was bouncing off the 78.6 fibs. So yes, we had that strong push through, but didn't break this bottom. And price basically finished an impulse, but then wasn't able to break the 78.6 fib. It bounced pretty heavily off of that. So what I was expecting here is an ABC zigzag again. We got ABC, ABC, and another ABC. I thought this morning that this is probably close to ending the A, but could have pushed it a little bit further before we get a B. I think we're seeing the B right now, in fact. So what I would expect is price probably to retest 122, 121.50, test that support level, and make another bounce for a wave orange C. Right there. Yeah, regarding, Darshan, good to see you. Yeah, regarding why the pound recovered strongly last night, I'm not sure what sparked that. I was also quite surprised to see a 180 pip rally in the middle of the night. While I guess that's becoming more normal nowadays. We saw already a pretty huge decline in the middle of the night, my night at least. So somehow that's becoming more typical for the pound. Who knew? Things change, but yeah, that was also a bit unexpected. So second time already in a very short period. Now, I wasn't surprised to see price bounce off the 78.6 fib or the 61.8 for that matter. How it bounced and when was, or when especially, was interesting though indeed. But still, with regard to the future, I would expect just this triangle to keep building like this. All right, dollar yen. Dollar yen, it bounced, but didn't make any head. Basically, had higher. It failed to do that, and made or built a consolidation here, and ultimately then broke that consolidation to the downside instead. It broke and made lower lows and lower highs, and eventually got back all the way to the bottom. We talked about that, or not all the way, but close to it. We talked about that yesterday, that if it breaks these bottoms, then we're probably seeing a bigger correction. So that happened indeed. We didn't get the bounce as hoped for. But anyhow, anyone who's still in this trade, you got to break even. That's great. This trade is still alive. Anyone who tried to take the trade bounce in here, I think that hopefully you managed to move the stop losses below these bottoms here. Because anyhow, if this is a bullish break, right, you want to see it push above it. And if it breaks this bottom, then it's not something you want to hang into. So finding that moment where you cut, let's say, the trade, or where you manage the trade, it's not easy, I know, but when you see a consolidation like that, it's a great time to use it for in your benefit, right? Reduce the risk, and if it breaks our way, great. If it doesn't, nothing lost. Now at this moment, I still marked it in my wave analysis as a ABC completed, but now I think I would do it differently. To be honest, I think that this is looking corrective. So I think that now probably one more push lower seems likely. 102.92 maybe, right? And move down to back this bottom here. This looks corrective. Something like this, an ABC perhaps. Maybe even slightly lower, maybe even down to the 50 fib, because if this is an ABC, well, actually I have it as a complex correction at this moment. I have it as a WXY. So it could be an ABC like this. So anywhere back to 103, 102.90, even down to 102.50 is possible. But then that's where I would expect to bounce. If my bullish vision is correct, and this is indeed the start of a new uptrend, then it should do this at the support. So from my perspective, the most interesting trade is a buy from 102.50, 103. Price should not break below 102.30. And the target could be all the way up at conservative target could be 105. But More aggressive target could be, yeah, it could be a lot higher. Could be 107.50, even 110, even 112. Is the dollar yen in wave C of Y? I think yes. I think now it's in the this looks like an ABC indeed, and I would expect that to be the Y. I agree. Yeah, indeed. But the alternative could be an ABC, a flat, for instance, where this is, and then we get a 5-wave like this. But a 5-wave, if there's a 5-wave here, it's possible, but then the retracement would be pretty deep, because this first wave was pretty deep. So this one was 80 pips. Another 80 pips would bring price down to the 38.2 fib. We would have to have a very shallow correction and then one more dip down. I guess it's possible. If that happens like this, if this happens, hang on, my drawing tool is not cooperating with me. If this happens like this, then it would be an ABC, and we would expect them to turn just a bit lower. So that's possible. The other alternative could be if this price does this, and it doesn't make a bear flag, but it actually shows a close in reverse, and it enters back into, especially above this top with momentum, and we see an ABC back, then it's time to, in my opinion, to buy. Then I'll be buying here, right? So now you can maybe see the difference. So first of all, bullish bounce and a move back up above this bottom, because that's either wave A or 1, plus an ABC pullback, preferably for weakness right there. Alternatively, if it falls and we see a triangle or a weak correction, then it's probably a 5-wave. With one more push, we'll have divergence, and then we should see the bullish momentum. And we should see this, and then probably this again. Let's see, positive pound news. Government accepts need for debate on its plan to quit. Ooh, that's interesting, Dogon. Where did you read that? Just out of curiosity, I'll take a look. Or can you send us the link by any chance of the article, perhaps that you're reading? That would be interesting. So the government accepts need for debate on its plan to quit EU. That's intriguing. I wonder what the details are there. Like, are they rethinking whether they should quit, or they're rethinking the details when to quit? That's what's going through my mind. Let's see, Zitan is saying, the details. Okay. Yeah, makes sense. I mean, that would be a big shocker, I guess, if they would rethink the entire plan of quitting. That would be maybe a tad too much at this moment. Let's see, the Z10, the 4-hour has got a lot of wicks. Let's take a look. Oh yeah, good point. Good point. That's true. Yeah, I see your point. It does look like a bullish bounce from this perspective. Interesting. So let's talk about that. If this is not a correction, but this is actually finishing a correction like this, then from that perspective, this would maybe be multiple ways, 1, 2, 1, 2, maybe another 1, 2, and then here, or like this, 1, 2, and then of a smaller degree, 1, and this is still a 2, and this is making a correction like that. If that's the case, then, okay, great, Devin. And is that the correction, dollar yen? this looks like a correction, but on a 4-hour chart, we're just discussing that these are bullish candles. So from that perspective, I think that this is a bearish correction probably if price manages to break below 103.30 here. Then it breaks this trend line and breaks this bottom and these bottoms probably. That's, we can see the downside. Otherwise, if it probably stays above this trend line and it bounces again, then in that case, I think if we see a break of this trend line and this trend line, we might see an acceleration. All right, in that case, then this is probably not a bear flag, but the start, a choppy start of a new trend. That would be the alternative. All right, odd USD 75.30. It missed my 75.10 level, unfortunately, by 20 pips. I was looking for minus 61.8, and this trend line, it really was close, but bouncing. I still think it could get there, though. This is still in a downtrend channel, don't forget. It is pretty bullish, the bounce, that's true. Let's take a look at the 50-minute chart. It looks like one move, strong move here. There is a bit of a dip here, so could that be an ABC? ABC back to close to the top of the channel. Well, for me to be a buyer, I really need price to make that one last dip like this. Or if that doesn't happen, price needs to break out of this channel. All right, in that case, price needs to break. Well, in that case, actually the break is not so interesting either because we're in this big triangle. So no, that's not too interesting either at this moment. So that's all from my perspective, is looking for a long at this level. If it breaks the channel, then I would probably still need to make a hook back before I take it long. If it breaks the triangle, that would change, of course, things. That's also a bullish environment. If it breaks through 75, then we're getting into bearish environment. But that's just, and just generalizing here, I don't see particular trade setup. For me to trade it, it would need to break, it would need to make a bear flag, and I would trade the break or the turn of the bear flag. So that's probably a long time from now. So the only thing realistically that is worth discussing now is, I think, this long. I don't think it should break below 74, 75 probably, 74.70. All right. Let's see, Kiwi. Broke. I'm just trying to understand. Yeah, it's been choppy. I said that I was looking for a retracement. It didn't retrace. It didn't go anywhere really. Right? It just went sideways. So nothing really lost with not trading it, as you can see. It is showing some slight upside now recently. Finally, that's what I was waiting for, the bigger retracement. I think that's still the same, to be honest. I think it's still the same retracement we're waiting for. And let me get rid of this fib quickly. How far could it retrace? Good question. Maybe not that much. Maybe just to these bottoms like this. Make kind of a bear flag and turn for one more push down. Let's see how this pattern develops. If this correction continues, if not, maybe this is all the retracement that we get. Who knows? I would still expect more, but if it doesn't, probably the only way of knowing is that if price breaks through this bottom. All right, but in that case, we're running into 70 pretty fast. Yeah, not an easy piece on the Kiwi. I'm not a big fan. Let's see if there's anything else. Dollar CAD got the retracement and the bounce. We're talking about this candle yesterday. If it's bullish, might see a retracement and a bounce. We saw that. But look how choppy it is. It went up, but then slammed into the resistance right away and is moving down again. So, okay, this is really not a great environment on the dollar CAD. It moved up, but it did move up some 60 pips. But so it depends how fast you are with catching that profit. Now, bullish candle, fighting resistance, doesn't look that appealing either. Let's take a look at something else. Euro yen continuing in this pattern as well. We talked about that this could be a bigger ABC range. It's not a great thing to trade in my opinion, but ultimately, yes, making that momentum now. It probably can ride with that momentum as the euro dollar is also bearish at this point, and the dollar yen is still corrective. So the euro yen, I think, is looking like a flag. Anyhow, good momentum here. Yesterday we were talking about the fact that basically it's building an ABC here, then an ABC here. Sorry, ABC here, ABC here, and it might have completed an ABC or still has to do that like this. All right. Now considering, so basically choppy environments. Considering the fact that we have bearish momentum now, it could do that still and continue till down here, for instance, before it bounces again. Strong daily candle. There are some wicks here, but this is, I think, at the moment just going sideways. Let's add the oscillator here quickly. Strong momentum. I think a bottom break here is likely. All time frames, very strong momentum. Sorry, folks, I just got distracted there. So yeah, I think this is a bear flag basically, and I think that we're going to see a break of that. The question is when. So I think that probably break through 114.25, a break here with a candle like this, for instance, and I'll monitor it on the 5-minute chart preferably. Look for instance, a break like that. Look for a small little consolidation, and I think we should see a follow through. Something like this, for instance, here, right? Or here. Stuff like that, I think, are good signals, good pauses for after the break and signal continuation. So that looks interesting to me. Euro yen downside for the moment. Dollar yen, I think later on will be upside, either lower or if it manages to break and continue. I think that the euro dollar downside is interesting, but either, yeah, after basically it's still a small dip, but after retracement basically. Aussie, I'm more interested in a bounce at this level, as I said. What else can we look at? Euro pound. Not that interesting in my opinion. Let's see. Let me check the, no, I don't know. Could be a bounce. Pivot point. Let's see if there's something better. All right, pound odd. Looked good for short yesterday, but we didn't get a good candle. In fact, there was a wick there. Eventually, we did get the break. This was a strong candle. Price is still about the same price level. So anyone who took the break or took that candle, yeah, it didn't go all too much. Let's dive into that, see what's happening there. I would still be patient with it. It's below the pivot point. This is the weekly pivot point. It is below the moving averages. So it might make the continuation now. All right, so anyone in that trade from yesterday still, perhaps on this break or on the candle close, then you'll be probably around here. I would probably move the stop loss just above here or above here. But now I don't think there's any particular trade to take at this moment. If it does bounce here, but it shows kind of like smaller candles like this, then the next break still could be again interesting. Gold, yeah, let's take a look at gold as well. We'll take that's, I guess, some of the majors. We got maybe some minor crosses left, but I don't know. There's a lot of them. So if you have any particular one in mind, let me know. All right, DAX still not breaking the bull flag. Oil still pushing higher, retesting this top after this triangle break. Let's see if it breaks this top. That's the next hurdle, the next resistance after this triangle break. Regarding gold, let's take a look. All right, we saw basically price make a swift downside. This looked like a wave 3, we said yesterday. Now we're looking for a wave 4 correction up to the 38.2 fib. Probably at this moment, it looks like it's correcting like this, which means that it's a bullish correction. Here we saw some momentum. So it looks like it's setting up for an ABC zigzag like this up to the 38.2 fib. If we put a fib from here to here, all right, we got a minus 61.8 target, nicely lining up with the 38.2 fib. So from this perspective, the fact that price is making a choppy downside neatly supports the the analysis that we were expecting in ABC up to the 38.2 fib. After which that would complete 4. We'll see probably then in that case a turnaround and a push lower for one more lower low and a move down to what was yesterday we said the 50 fib at 1210 around this bottom and the minus 272 target right there. So something like this, basically up, down, up, turn, and then down, and then probably a bounce again. Now how it will bounce here, that will say a lot about whether gold has more downside left or whether we're going to see a bigger rebound here. But for the moment, it seems most likely, until then, that we'll see an up and a down. Index, dollar index, we got a question here, so I was just reading the question. The dollar index, yeah, it's good to look at, definitely. I don't think it necessarily, it will give us some idea about the dollar, of course. That does not necessarily mean that all dollar pairs will move the same. Some dollar pairs will move differently, more or less, depending against who they are paired. So we're relatively, let's say there's dollar strength in the market, generally speaking, but we see that, relatively speaking, pound is the weakest. Then pound dollar is probably going to move the most, whereas Aussie maybe is the second strongest after the dollar. Then Aussie USD will not move as much. It might move a bit lower, but not as much as the pound. So the dollar index could give us, a general feel about the dollar, but still it would be good to look at what pair to trade exactly. So regarding the dollar chart itself, this week is going to be very interesting because we're trying to break this trend line. If this weekly candle is anything like it is now, with the close in the high like this, that looks like a good breakout. On the daily chart, we already had a breakout. All right, so that looks good for dollar strength. Dogen, I think that's really, yeah, that's probably coincidence. That's just tough luck indeed. If you've been shorting, then you were generally speaking going in the right direction. It's just that it turned out to be a massive consolidation and a very, very long pause within the tight range. And yeah, there was really a long time before it broke, 2 months. So yeah, that's just I think very unlucky. So yeah, that can happen, and that's annoying, but it is very unlucky. 2 months is quite long. Here you go. Here it started, August, all the way to mid-October. So this was 2 months of trading here. Not a lot of movement there. And if you look at the weekly chart, you see that even these parts here had a lot more movement than this small little part. So that was annoying, indeed. If you look at it from a wave perspective, this is, it's difficult to say if this is still a D. I think it is, but it depends on how fast this moves down. Alternatively, the D and the E have finished and the downtrend has started. In that case, this would be A, B, C, D, E, and D, E were then very quick, very short in time. That's why I think personally it's more rather an A, B, C, D, E still before we get the big break. Whether this is D or the downtrend, basically that depends on how price moves here. We can see that I think that this is looking more choppy. So from that perspective, I think that we'll see this more as a D, and we'll still see one more rebound here and then a turn back down. Seems more likely at the moment. D, good question. D could finish anywhere along these fibs. Basically 109.35 is a 61.8 fib. We're breaking through the 50 already. 78.6 fib is 107.50. 107.50 probably is the most likely turning spot, I would say. Or 106.40 is the 88.6 fib. But let's see if this is a lot of momentum here, and it does this and it keeps pushing. Yeah, then the downtrend has started. It really depends. I want to see how much momentum. For the moment, I would expect this indeed. But I also want to see how much momentum kicks in here. Alrighty, so for those that managed to hang in there so far regarding all these wave counts, basically, as you can see, maybe here and there some what-if analysis, right? So the idea about it is that I think that for those doing wave analysis, unless you really love it and it's your hobby and you just, look forward to doing it and go ahead and have a full wave count for yourself, or look at mine on ironmarkets.com. That's great. For those that want to use it more practically but are not, let's say, that interested in it, you can do that by just focusing on whether price is impulsive or corrective, and then understanding at what point do we get an invalidation or confirmation. That's keeping it simple, right? But you still have more idea about the market structure and what's going on with the overall trend, and you have an idea about the psychology of the market, and you can anticipate movements quicker and understand what those movements could be as well. So you could do that really without labeling it, or labeling it without really labeling it very intensively, right? So labeling it, as you know, there's a couple of ways to do it. We got a 1, 2, 3, 4, 5, that's impulsive, or we have an ABC, that's corrective, right? That's everyone knows probably, that's not so difficult. The thing is, when the corrections become complex, right? Then you get ABCs and other ABCs. That's when you start to use WXYs to tie those, basically those corrections together, right? We had an ABC here, then we have an ABC here, and then we have an ABC here, for instance. Or you can have triangles. Those are even more complex, right? Where you have basically price making like this. It's a chart pattern. That too, and you have A, B, C, but then you have a D and E. All right, so those are all the formations basically, or all the letters and numbers that are used. Now within impulses, sometimes you have extensions. You have 1, 2, 1, 2, 3, 4, 5, and then 4, 5 again, right? The wave 3 basically is extended with another 5. All right, still using the same numbers, but just generally differently, extending it. So that's basically it, right? Would you want to use those numbers or not? Depends on you. You don't have to. You can just look at corrections and impulse and try to understand the story behind it and try to make a forecast from that, and try to use that step by step forward. Try to learn from each forecast. Try to make it better next time, and not necessarily even use it for trading right away. Just take it as a learning progress, right? Or use it only in times when things are more clear for you. Now, the best thing to do is to have an idea about, keep in mind the swings once again, right? We want to compare apples to apples, all right? So we want swings that are logical. We don't want to say that, for instance, this looks like anyone who would label this like a 1, 2, 3, a 4, 5, for instance, right? Yeah, that's not how you want to label things like that, right? Then this is creative accounting and not in a good way, unfortunately, right? You want to try to keep things logically that fit to each other. And I know that what logically fits together might not be logical to someone who's starting, but therefore use the Austin calculator, see what those swings are. All right, that will give a big help with that, with the swings. So try to keep the swings in mind with the labeling it or understanding what parts belong to each other. Now, with regard to confirmations and invalidation levels, once you start to understand more of what swings belong to each other and what is corrective and what is impulsive, right? Those are the first steps, basically. Anyone can use that. If you want to take it to the next step, then you can start to tie together these swings and say, okay, I see bullish impulse, I see bearish correction, and I'm expecting other bullish impulse. So you're already, just by doing this, you're already starting to do wave analysis, although you don't even have to label it, right? This is the next step. After swings, after impulse and correction, once you start to connect them, that's the next step. That's already starting some simple wave analysis. The more the more swings you look at, the more you start to analyze it, bullish, bearish, impulsive correction. The more you start to look on different time frames, the more you're starting to build a story for yourself and understand what the validation confirmation level could be. All right, and what area would you like to trade in? What points are you waiting for, etc. Once you start, the third step would be then to label them, partly at least, right? Some things that are simple to see or make sense to you. And then the last step would be a full count label, and you start to heavily trade on it, right? The third step, you might say use it as a supportive tool. You might use it occasionally, not always. You might use it in doubtful cases. And then the last step, then you would be relying on it more heavily, right? So there are about 4 phases, I would say. And depending on how eager and how exciting you think this is, you will find, the step that belongs to you. Now, some people don't even look. There are also people that don't look at it at all. Don't look at impulse and correction at all, right? That would be also possible. So there are 5 steps in a way. So most problem is that people go from not looking at it at all and trying to go to step 4 right away, right? The last one, trying to make all the decisions on waves and then give up. Or there are many things, or just, think that basically it's a step-by-step process. You got to build that experience. Just can't expect too much from it immediately. That's most of the time, I think, the issue. So with this in mind, if we talk about invalidation and confirmation levels, for instance, in impulses, it's pretty clear. Most of the time, what we're looking for is a 5-wave pattern, right? Now, in some cases, there are some rarities where we don't have a 5-wave pattern like that, but we have actually a 5-wave pattern like this. Those are called leading and ending diagonals. That's a choppy start or choppy finish. Those things happen. You could even have a truncated 5th wave, where wave 1 goes like this, 2, 3, 4, but 5 doesn't break above the wave 3. Those things happen. There are exceptions. They don't happen that often. They do sometimes, yes, they do occur. So you can have choppy beginnings, choppy ends, truncated ends. You might even have formations where price is doing this at the start. That's where you have the ending diagonals like this. 3 wave, wave 2, and those are not so typical, but so when you talk about invalidation levels, right, it is important to know, what kind of structure we're looking at, but these kind of details regarding, leading and ending diagonals, it really depends on how much you want to use it, right? If you just want to use it in a simple way, then keep in mind that this is the typical 5-wave structure. Sorry. Extensions are possible, by the way. Be aware of that. Okay? So with that in mind, you just want to keep in focus that wave 2 can never break below 1. That's always, no matter whether it's a leading diagonal or ending diagonal. So the invalidation level is always the bottom of wave 1. All right? The invalidation level, the confirmation level of a wave 1 is basically price, in my opinion, price bouncing at a fib, breaking above the top of wave 1, moving past the minus 61.8 target, because that's when it shows impulsiveness. Those are confirmation levels. All right? The end of wave 3 is difficult because it could extend, it could push. I do not recommend trading against that at all. You don't want to trade wave 4 because wave 4 are slow and choppy. What is possible, though, is to trade the retracement, the end of the retracement here. Wave 4s can last long, though. All right, so be aware of that. But shallow fibs, typically 38, 23.6, 50 fib. Now, typically, we wouldn't expect a wave 4 to go deeper than the 50 fib. So it's not an invalidation level, but a move below the 50 fib makes a wave 4 unlikely. A move below this top actually invalidates a typical 5-wave structure. And then the wave 5 basically, which should go to some lighter targets, not too far, because we should see divergence. Any bearish candlestick pattern here could indicate the start of an ABC zigzag. As soon as we get basically momentum going, that would confirm probably the A of an ABC zigzag, for instance. And if we see a choppy upside, that is probably the B, and we could expect the C and the fall. All right, so basically, we could also, with wave 5, there could be a breakout trade right there as well. Now, within the wave 3, if we look at it like this, right, mind you, that there could be another 5 waves. So there could be a 1, 2, 3, 4, 5. So all the things I just mentioned for the wave 5s are valid for here too. Wave 2 cannot break the bottom of 1. We got the confirmation when it turns, when it breaks, when it passes the target, and when it hits the fib, and we can expect, again, to move up. Confirmations on, also, by the way, that one, just to emphasize, the minus 61.8 target is important because we don't know if it's, sometimes we don't know if it's a 1, 2, 3 or an ABC. If it moves past, first of all, we can also count the wave 1 length, all right? And if it's more than the wave 1 length, if it stops exactly at the same length of wave 1, right, then 1 is equal to 3. In that case, it's probably more an ABC. Once wave 3 starts to really expand further, then it's starting to look more like a wave 3. That's when you get the confirmation. As far as I know, I'm not sure if there's any max. I've never heard of a max, but if you, every time basically you look at a wave 3, it could be extended. It could be happen sometime, many times, sorry. So for instance, here we have a wave 3. So here we can have a 1, 2, 3, 4, 5. Within this 3, there could be another 1, 2, 3, 4, 5. Sometimes that goes, yeah, I've seen, I don't know, on a 1 hour, 4 hour chart, I've seen multiple of those. With ABC zigzags, there's the invalidation of the origin of A, the start of A, basically. Confirmation, we get when price is showing momentum. And when we see a choppy kind of upside, probably, price not breaking this top, price should stop at 50, 61.8 fib typically, maybe 38.2 fib. Price should break the support trend line and start to fall down to the minus 61.8 target or minus 272. That should be the bouncing spot. With a triangle, it's pretty simple because, all right, C cannot break the bottom of A, D cannot break the top of B, and E will not break the bottom of C. All right, so we get lower highs and higher lows. The confirmation would be if basically price bouncing here or breaking here, as the triangle is finished. With a complex correction, like this, tops and bottoms are really not that vital anymore because with ABC flats, you could have price stopping at the previous bottom and top, but like this, but you can also have it like this, where price basically breaks the tops and bottoms a bit. All right. So with that said, invalidation level of this being correction is actually the 138.2 fib. Price can exceed this top by a bit, but not too much. That's the invalidation level. Confirmation level of a complex correction, well, I don't think there's really necessarily confirmation. If you see price moving choppily, that's probably the best confirmation you can get, I guess. Typically, you're going to see a lot of ABCs, you're going to see a lot of zigzags and choppiness, and overall, when you zoom out, you just see price not doing too much. Within complex corrections, it's good to zoom in and try to get an understanding of if there are any zigzags like this going on, or basically it's still potentially tradable within that zone, but you got to look at the details and you got to be careful. Look at the euro dollar, for instance, here on the 4-hour chart. All right, so this was, in my opinion, a correction. This was a correction. This was a correction. This was a correction. This was see a lot of, so are there some parts tradable? Yeah, but it's not easy. A lot of things here. There's really, the confirmation is the fact that it's bouncing at support and resistance really, right? It's always bouncing here and it's bouncing here. And breakouts are difficult. Your dollar looks now, well, we still have a few minutes left in this hour, but it does, if it's something like this, it does look like it's going to start a bit of retracement here, especially if the 4-hour candles like this, I would say. But once again, I think that the upside is limited because I would be looking for a turn right here. I don't think it's worth, my opinion, not worth trading to the upside. All right, so that's I think some theory there on invalidation confirmation levels. Practically speaking, sometimes things are very clear, sometimes not, and sometimes it's a mix. So sometimes, you know, when you see a certain situation, like, I don't know, for me, the dollar yen, for instance, recently, when price started to break here, for instance, that to me was very likely that it was a wave 3. All right, so I didn't have much doubt about that. I didn't really necessarily have any alternative in mind because that seemed very probable. Other times, you know, is price making an ABC here? Is it making a 1, 2, 3, or is it making a flat? Sometimes it's not clear. So sometimes, in fact, it's beneficial maybe not even to even think about the wave analysis too much, right? Look at other things. Or it could make sense to think about two different scenarios and have in mind, you know, which confirmation or validation levels would support either of the two. For instance, whether this is an A, B, C, or 1, 2, 3, I'm not sure at this moment. Could be both, in my opinion. But did it matter when price was here? No, because both led to the fact that this was a bouncing spot, right? So this is alternative counts, but not really that important because they still have confluence. Both had an invalidation if price were to have broken this bottom, and both will be confirmed if it breaks above the resistance of the daily downtrend channel. So it really doesn't matter, right? Other cases it does matter. So for instance, if we're in the case that I think that this is, can't think of anything at the moment, but yeah, I cannot come up with a good example, but in this chart at this moment, but let's say if this is a 1, 2, 3, 4, 5 for wave 1, right? Or is this still part of a bigger correction of wave C and we expect a downside? Well, that has huge implications, of course, whether it's upward, bullish, or bearish. That's a big difference, right? If it's a wave 1, then we expect a wave 2 and a wave 3. If this is the end of the C and we expect one more downside, we should see a downtrend continuation. That's a big difference, right? So that's alternative counts. And then you get into a situation where you want to do some what-if analysis. In that case, we want to see how price turns here and how it moves to the downside. That will give us more information whether which one of these two is more likely. You see, if this is a C, we would expect a 1, 2, 3, 4, 5 to develop lower again, right? If it is a 1, right, and this is a 2, then we would expect an ABC zigzag here. All right, and we would expect then price to bounce like this, make a rally, a hook back, and go again. So we can see at the reaction, we would need more info to gather more info about that. All right. So that's just some info there. I would stop here with regard to waves because tomorrow, anyhow, we're going to have a wave, not a wave, but I said, sorry, a pattern webinar, excuse me. But waves will be part of that. It would also be candlesticks, by the way, chart patterns. They're going to be divergence patterns discussed, just general market patterns, time patterns. So we're going to have 2 sessions on that. I hope we'll manage to discuss all of it. Some things will not be as deep as we would like, but we also have specific webinars for some of these topics, like candlestick webinars we've had already before. So, but then, yeah, tomorrow and the week after, we got the 2-part session on patterns. So we'll discuss that more. Then next week, we'll continue with patterns, as well as I said, this webinar on Thursday, but Tuesday, Wednesday too. So you can do that by going to analytics and clicking on, education and clicking on Forex and CFD webinars. With regard to some questions here on New Zealand, I'm going to take a look at that quickly. New Zealand is still pushing. Wow. Had a lot of struggle. Yeah, it last few hours broke above this, looked like a rising wedge, but not all these patterns, or it looks like a channel really, doesn't it? It's trying to break this channel. Let's see if it succeeds, but I think that still, ultimately, it's very close to resistance. I would not want to trade it to the upside. I still think that this is a formation that will run into some problems and still make a retracement lower to these fibs. All right, but once it does that, right, I think it could be very interesting, depending on how it corrects here, whether it's a flag like this, right, then it could make a shallow retracement, or if it makes more of a quicker zigzag. I am bullish upon price going back to these fibs. Which fib depends on how it corrects. But this is momentum. I expect a continuation of that. I don't expect that this first push, though, will push a lot further. It might, but I don't think it's worth trading because it traveled already so much and it's so close to this daily top. I think it just, before I want to trade it, I need to see it pull back. I don't trade the pounds indeed on the euro dollar because I like to see bigger spaces. Then indeed, for me, if the target is 110.75, it's too small. I don't mind necessarily, exiting for 25, 30 pips, but I typically like to see a zone that is at least 50. Also because if you have a zone of 50, there's nothing to say that you get all of those 50s or all of the 50 pips. All right, you might end up with half of that. So if my zone is only 25, can I get all of those 25? Maybe. It's not that great. Now, if one is scalping, that could be different. I'm more looking at intra-week, intraday swing trades here. But if you're scalping, yes, that's different. If I would be scalping today, then you don't want to wait the whole morning before it reaches up here, or who knows, maybe it just flies by that as well, right? Then I think it does make sense to look for longs. So in that case, let me think here for a second. I would probably still want to see this 4-hour candle close, but after that, if it does close something like that, yeah, then probably a bit of a dip back still. Maybe even a bull flag here. I don't know. I don't scalp on a naked chart, so I'm not sure. I scalp with indicators. So I'm not sure how my indicator template would look like. That's something we'll discuss 2 weeks from now. I'll show you the template I use for that. But generally speaking, though, yes, if there is some weakness here, there's, I think, from a scalping point of view, yes, there are some pips to be made up to 110.75, 111. If we get the bounce. It does look like we're getting the bounce, but just to confirm, I think that I think this 4-hour candle is important, though. I don't want to advocate a bounce just like it was here and people get trapped. You know, be careful of that. The momentum is down. Any bounce trade here is definitely counter trend, reversal-ish. And at this moment, I think it's safer to wait for a pullback and turn that rides and that falls and goes with the previous momentum. That's another reason probably why I like that I would skip this trade, is because the momentum is down. We had a bearish break. We have a very strong daily candle, bearish daily candle, a close that is near the low. This is, I think, a better environment to look for shorts. The question is, where do we want to short? I think that it is better to short after retracement. That's why I think those are the main reasons why I think it's better to skip along, because although it seems likely that retracement could happen, it's not a guarantee. It could also just continue like this. In that case, I'm not trading it, but I'm not losing either, right? That could happen too. It could fall down to 110 easily, even if it falls down below 110. If there's another bear flag, I would be trading it down again. So those are the main reasons. Does that make sense, Dogan? I mean, from a scalping point of view, maybe. It's risky, but maybe. But it's risky. So be careful with that. So, okay, cool. So let's see, last question here. Gold is bullish. Correction for wave C. Pound dollar is also in wave C. Let's see. Pound, yeah. Ooh, strong upside here indeed. So I had this fib on, or I wanted to. I mean, I was saying ABC is a shallow bounce. That's expected a bit deeper, but this has a 5-wave pattern. Let's see, if we get a move higher here and we see a bull flag, I think that could be still another attempt to grab something to the upside here. But not now, in my opinion. There's bullish momentum and resistance. That means either this is going to bounce for a hook back, or it's going to break. If it breaks and we see a bull flag, I'm interested. If it bounces and shows a head and shoulders like this, I would maybe also be interested. Or if it reaches the 50 or 61.8 fib. However, if it reaches those targets, 124, 123.90, that could also 123.90. Let's see. This could be an ABC zigzag like this. So I think the minus 61.8 target was logical, to be honest. I think that the 272 target could be a pause, but if it shows a bull flag, it should break to the minus 61.8 target. This probably will be an ABC, I would expect, as we already talked about in the wave analysis. Doga, yeah, Sorry, but yeah, we'll definitely take a look at that. Just need to finish these pattern webinars, and we'll take a look at that 1 minute template I use. New Zealand CAD. Let's see. This is a different template. Let me use the other one. I have not looked at New Zealand CAD in a long time, so on top of my head, looks to be bouncing off resistance. Looks corrective though. You see that this part has less angle than this. Here, this part is quite small. Let's take a look. That should be the third wave. It's 178 pips. It's less than the first one, and it's less than the fifth. So this is not a wave 3. From that, we can conclude that this is either this is probably some type of complex correction. There's still, pretty strong momentum here. So this could be just a flag, and we could see a break lower. Like this. I think that could still make sense for trending it lower, a break of that flag. But ultimately, the target, I think, is pretty close by at 92.80 right here, after which it could bounce strongly, because this all in all looks like a correction. So it probably will bounce. Now, depending on how it bounces, it could expand the correction. This could become one correction. This could become another correction, and then we can go down again for another correction, like that. But ultimately, I think at this target, there could be some upside, even if it's a correction or if the uptrend continues. Depends on how it bounces. Now, I might be wrong, and if it breaks through the minus 61.8 target instead, then it might not be a complex correction. What could be is that it's alternatively, this is a wave 1, 2, wave 1, 2, wave 1, 2. And if it really starts to break through the minus 61.8 target, as I said, minus 61.8 target is always important, whether it's a correction or impulse. In that case, then this could be part of the wave 3, but then it just started later on. That would be the alternative if it breaks through the target or only kind of temporarily pauses at it. Yeah, if you feel annoyed by a loss, I hear you. And sometimes if it's so annoying, it might be better even to skip or a day or wait a few hours or take a lower risk on a trade just to kind of get your feet in the water again. Sometimes just a break helps. Could it retrace and continue? Yeah, I think it is definitely. I think this looks like a retrace at the moment. As long as it stays in this flag, it does. As long as price stays below the 38.2 fib, it's a flag, 93.90. Let's see. Is it better to trade a flag or just above the wave 1? Let's see. I'm not sure what you mean. Oh, look at that. Your dollar moving down again. That's right. I think, well, we got a couple of good 1-hour candles, so this could be a retracement easily. But that's why I do want to keep an eye on a 4-hour candle instead. Well, I think flags are great to trade. just above the wave 1, I think, is a difficult part to trade because we don't know if it's ABC or wave 1, 2, 3. But it is possible in some cases, indeed. It is a confirmation level and sometimes tradable. Not always, though. Next 4-hour flag is looking very doji-like so far. Yeah, now we have to, I think the best is to wait for this candle. Because what could happen is it still makes a few pips lower to really test and hit 110. That could happen. So let's see how 4-hour candle closes. All right, folks, I got to wrap it up for now. If you want to trade the wave 3, in my opinion, the best is to take at the start of wave 3, the end of wave 2. That could be with a candlestick formation. It could be upon the first break. So it could be the bounce. It could be the break. Then it would have to break the top. That could be a small pattern here, for instance, like that, and take the break of that, or the pattern itself. The same holds. Then after that, we have to wait for flags and smaller corrections to trade part of the wave 3, basically. I would not buy necessarily from 110 myself. I'm not a big level trader though, so maybe you'll be asking the wrong person this question. I guess it could be better to ask someone else. I'm not that type of trader anyhow. I wait. It has to be better level, better circumstances for me to take a pending order. So I wouldn't do that. No, I don't know about that. There are a lot of traders that do trade from levels just like that, do perfectly fine as well. I guess it just doesn't suit my psychology that much. So I'd rather wait for some candlestick patterns there that might be something to discuss about looking for a bounce then up to 110.75, 111. Alrighty, so yeah, that's my view. Looking for confirmation. All right, folks, thanks for being here. It was great. I hope that we'll see you in the upcoming webinars. You can check that out once again with admiralmarkets.com and right here. And wish you all great trading. Cheers.